Hey folks, Dan Frio here, the Mortgage Update. It is March 23rd, 2020. Let's get at it. Well, mortgage delinquencies could bankrupt mortgage servicers. Obviously, if you lend money to somebody, hold on, my dog's barking. If you lend money to somebody and they can't pay you back, it's not a good business plan. But I don't think this is nothing like 28, 9, and 10 where there were just bad lending practices that just crushed the world economically. This is, and I'm not trying to make light of the issue. This is a virus that's going through, the hopes on all this thing is, it's a 60 or 90-day cycle. It's just, we're kind of putting patches on things to get people through it. Quarantine everybody. They're out of work. Give them maybe relief on their mortgage for a month or two, one or two couple months of paychecks. Unfortunately, it's going to drive up the deficit, but you kind of try to pick the worst of all evils. So don't let a lot of these headlines shock you. Here's what kind of irks me, and I probably shouldn't even bring this up, but this kind of ticks me off. This Jamie Dimon, he's basically the head of J.P. Morgan. Because they did so well last year, he made $31 million. Well, after, they don't hit their records this year, he'll probably still make a bazillion, and they'll probably get a bunch of funding from the government to bail them out. But the guy became a billionaire working at financial institutions, and he was even a big part of, when everything crashed in 2008, 9, and 10. It just makes you sick because these guys, it's deja vu, I guess, as I'll say it all over again. So I've been through these. I've been crushed, just like you guys. And that's why I do the channel, to give you my true opinions on what I would or what I wouldn't do. So let's get at it. What happened today? Well, I posted an alert this morning. I know a ton of you guys saw it because my phones rang all day. And they're still ringing, and I am at home, and it is 8:45 my time, and I have one of my assistants calling somebody that just texted me saying, hey, I want to know what your rate is because I want to lock in. And I just, send it to one of my assistants to call. I promise you I'll try to do my best to call you personally, but I have a staff of about 4 or 5 guys and girls that'll take the calls when I'm on another phone call, and I promise you I'll do all I can to reach back out to you personally. Just so you know, I am involved when you put in an application. I see it. I review it. I'm in the process of the rate locks and rate monitoring and all the pieces of the puzzle. It's hard, and it is, like I said, it's 9 o'clock my time right now, and I still have another couple hours of work to do. So don't feel bad for me. I'm blessed because you guys watch me, you guys call out, and you keep me in business. So thank you. And I don't even make a fraction of this money. So that's what ticks me off when a lot of these companies come in and they rant and rave about how great they are. How do you think these companies buy sports cars and arenas and all this other stuff because they're giving you the best rate in town? No, because they have great marketing plans that drive in so much business that if they have 100 phone calls in and they gouge 50 of you, that's a lot more money than they expected. So we'll leave it at that. So let's get on what happened in the market today. Basically, I did an alert post this morning, and I want to show you basically what happened during the day. This is just today's market report. So we opened and we went way up, and then we came back down. This kind of scares me, but it doesn't, okay? It scares me, but then a lot of the information that's just being posted now by the Fed is in unprecedented territories. They got ticked off the other day, and there was a great article that I just read. Their goal is to pump liquidity in the market to drive down rates. Again, supply demand. If they create huge demand for this product, which mortgage-backed securities, it's going to push up the price and down the yield. Well, they started buying last week, so let's get back to last week's numbers. So this is today. This is Friday, Thursday, Wednesday, Tuesday, Monday. So they announced in here that they're going to do something. They needed to stop this bleeding. This doesn't seem like a big move in the market, but this is the normal moving of the market. in mortgage-backed securities. So those new to the channel, I'll explain mortgage-backed securities in a minute. But they came out and they saw this huge volatility, but they're like, you know what? It's really not doing much to rates. We need rates back up to these historic lows. We can't afford the housing market to bust. That's the biggest push of our economy is the housing market, believe it or not. And the Fed's no dummies. So they came in and said, you know what? Heck with it. We're going to put as much money as we need into this, and we don't care. We're going to push down yields. Okay, so here's what they did. They basically came into market and they were going to put in $5 billion kind of a day to push down or make the demand high enough to bring down rates. It didn't work. It didn't work. It didn't work. So finally they said, you know what? They said basically, if you see in here, they came in and said, you know what? We're going to jump in. Look at this. They put in $15 billion. Then Friday, $49 billion, and then today, $47 billion, and they don't plan on stopping until this kind of levels out. The frustrating part, or the concern is, you know, it drove up or pushed up prices all the way up to here, and then it came back down. We're still phenomenal. We're still not at the level that I locked almost all of my clients. But one of the things that's happening, though, is a lot of the lenders, because of the volatility, you know, we can't do loans at 0% interest rates. It's not possible. Okay, there's just think of the salaries of everybody that goes into doing mortgages, from the application to the pulling of credit to appraisals to closings to everything. All those pieces of the chain, they're salaries. We all work for a living. You can't produce a widget and go out there and sell it for nothing. You know, you have raw costs involved. So that's where things are. This is absurd. And I'll keep going back to that. It drives me nuts. But the Fed, I think, once they want to get back to this levels, basically where it's stable. This drives everybody nuts. Just like the stock market. You don't mind your stock price going up 50 cents a day or lost 50 cents. What you hate is one day it's up 20, 30, 40 bucks a share. Awesome. And then the next day you lose 50. Oh boy. Then the next day you're up 30. Oh. Then the next day you're down 100. Oops. I would rather everybody sleeps better when you're just getting a modest gain. Okay? So that's what their goal is. And that's what the whole thing is. We're not going to monitor right now until things get back to normal. Inflation, manufacturing numbers, employment, unemployment, the Cass Freight Index, all that other stuff. We know everything's going to be terrible for probably 60 days. The employment numbers are going to be ferocious. Manufacturing is basically going to be a fraction of where we should be. Unemployment claims are going to skyrocket. The transportation indexes are going to be terrible because the only thing moving right now is food. So all those numbers, let's throw them out the door. So there's a short-term window here for the government to fix everything, for the coronavirus to subside, but this is giving homeowners and home buyers a phenomenal opportunity. Now, I just got a call from a gentleman, and this was it was a pretty cool conversation that we had. And he works out in Nevada, and he works at one of the I just went blank. Casinos. And he asked a question. He said, well, wonder if a stimulus package comes through by the government that would allow me or enable me to miss 2 mortgage payments. I said, great question. So here's my goal with you. I'm on your side with this. I'm not in this bracket. I'm one of you guys. I live in a modest house. I got 3 kids, 1 in college. I got bills. I have a car payment and everything just like you. So what I said to him is, I said, let's do this. Let's try to time this. And let's try to time it in a way. I lock everybody on at least a 60-day lock. Okay? So here's my thought process. We get the ball rolling on your applications. Okay? I'll monitor rates because, again, with the Fed pumping in more and more and more money, rates might get a little cheaper. I don't think. Even if this keeps going up to here, I think a lot of the lenders, and we're at their mercy is too, because we hedge our monies, we're not really going to see 30-year rates. If they hit 3, I don't think they're really going to go much lower than that. We even as processing on our side of that, we have a hard time keeping up with the demand right now because we haven't seen this amount of volume in years and years and years and years and years. So that being said, we'll get your application in the process. I did find a glitch. If you're outside of Illinois, the mortgage link that I'm giving you isn't working. So please, when you put in your address, just to amuse me, so your application gets through to me, click that you live in Illinois. Put your exact street address and everything, but just put Chicago, Illinois. So the application does proceed to me. I will call you, or one of my assistants will call you, go through your application, and we'll correct it at that time. So I apologize about that glitch. So I just updated my applications down below, my link. And again, if you go to the link, I would highly suggest you get the ball rolling. You have nothing to lose other than maybe 10 minutes of your time putting in the application. So here's what we'll do. If you're looking to refinance, and you're just saying, Dan, help me get this done, send me a copy of your mortgage statement, okay? And on there, just write down what you think your credit score is. I'll get back with you probably within an hour or two and say, okay, here's what I can do. Here's a game plan, and we'll call you. And I want to know some things from you. Are you looking, maybe can we consolidate some other bills at this time? Because you might not be getting a paycheck for a month or two. Are you comfortable with the payment? Can we maybe, lower your rate, maybe lower your term? There's a whole slew of things that I want to ask. I want to structure this just exactly the way you want it to go, okay? So put in the application, and I'll do all the due diligence on my side and come back to you and say, okay, here's exactly what I can or can't do. And then I will monitor. As you guys know, I do this every day, all day, from about 8 in the morning till about 8 or 10 at night. And I monitor this. And we're going to pick a sweet spot to lock you in, okay? Let's say, for example, the rates they just keep going down. I'm going to ride that market down. Let's say they take a turn for the worse. I'm going to, because we already have you in the process, all it does for me is all I got to do is see that and say, okay, I got click, lock, and you're done. You are locked in at that rate. I can't do that if you don't have an application in. So what happened last time when we were up here, I was giving out quotes. People would just say, I got a 750 credit score. My house is worth $500,000. I need $300,000 loan. Okay, here's what I can do. And then they pondered. And I'm like, okay, I need an application. I need something. I need to put it in the system because I can't lock on an email from you. I don't know anything about you. So then it dwindled down, and again, I'll explain this in a minute, but we went from these fantastic lowest rates in history down, and the rates went up and up and up and up, and they're like, then all of a sudden I see their application. It's too late now. That's why this morning I wasn't trying to be rude, but I'm like, guys, if you miss this go round, it's on you this time. I'm telling you everything that you need to do to prep so we can get you into the best rates ever. I sound like an infomercial. But I can't help you if you don't help yourself. So click down below. There's a link to apply. Do it tonight. Don't put it off. Don't and again, you're worried about, your jobs. You're worried about this. This is a simple process. Just put your application in. I'll monitor it for you. In the worst case scenario, we don't do anything. You just keep living your life and keep making your mortgage payment the same way you're doing it and have been doing it. But if we can help and you want that help, I'm here. That's what I do. Okay, so I'm going to leave it at that. It's on you guys on this one. I am here to help you, but I can't do it for you. So please, help me help you. Okay, so that's basically the trends right now. Is I'm going to go through this with you. The Fed is jumping in, and they're going to do everything and anything they possibly can do to prop up mortgage prices, MBS prices, thus driving the yield down. And you can see that through here. The Fed bought $75 billion in Treasury securities and approximately $50 billion of securities today. That wasn't, and they're going to continue to buy them for the indefinite future. So we are in quantitative easing. Maybe I'll do a thing on that tomorrow. Quantitative easing was the thing when we basically hit the 2008 to 10 debacle with everything, and it was brutal. And basically the Fed steps in and does what they need to do to help out, help everybody out. So let me explain what we do here and what I'm doing. So I follow people that follow me, watch me because they want to see what's going on with mortgage rates. I have realtors, home buyers, a whole slew, even mortgage advisors, believe it or not, follow me. And I like when you guys comment or answer questions down below. I would love to have you join my team. We need help. I know you're probably sitting there saying, oh, I got enough business right now to get where I need to be. I can almost guarantee you we can double your business if you come on board, because we're doing basically loans all throughout the country. We have a fantastic platform. In between radio and YouTubes and social media and everything else, it's driving in a ton of business, and I can't handle it. I'd love to get your help out there. So if you know anybody in the mortgage business, I'd love to hear from them to see if they'd like to join the Frio team. So getting back at it, what we follow here is the mortgage-backed securities market, the MBS market. We don't follow the U.S. Treasuries. We don't follow the S&P. We follow this. Why? This is the instrument that creates mortgage rates, okay? The easiest way I can explain this is the price that people were, what happened to the price today that people were paying for this particular bond, okay? As you pay more for a bond, any kind of bond, a treasury bond, a mortgage-backed securities bond, a corporate bond, the more you pay for that bond, the lower the yield or rate of return you get, okay? There's an inverse relationship. The higher the payment you pay, or the higher your investment initially, the lower your overall yield, okay? So as this goes up, mortgage rates come down. We love when it goes up, and 84 is huge. The tough thing is, throughout the day, we had a 130-point swing. So we ended the day kind of right here, basically lower than we started the day. I don't like that. But then when you start reading the Fed's going to jump in and start doing this day after day after day to build security into the markets, I'm not so worried about that piece of the puzzle. So let's see what happens with rates. Again, here, let me condense this a little bit. Let's get rid of some of these lengths of terms. Here's a whole bunch of things that I watch, and you might say that's just gibberish to me. It might be gibberish to you, but let me explain it just so you get it. Okay? So what happens here is, this is this is from the end of last year to now. We saw this move like this. Well, let's bring it all the way to here. Hold on, I should have messed this up. We saw it move all the way to here. Okay, that's an unheard of move. But the tough thing is a couple weeks ago, when all the coronavirus basically hit, we had an all-time low in mortgage rates. In my 32 years of doing this, I never saw the rates the way they are today, or where they were. And then we went from, I was locking people in about 3%. And then by the end of that week, this move pushed mortgage rates up from 3% to about 4.5%. Some companies were in the 5s. So that is a huge move. So you could see, these might seem, oh, those are normal bars. They're not. This is a normal week. Not this. Okay? So we watch this. And right now, I'm doing it, as you see, I'm doing it morning, noon, and night, helping my clients lock in at hopefully the best rates in town. So that's what I follow here, and I follow it every day. And you can look back. I probably have 500 videos that I put on here. I'm watching this for you because the average loan we have is about $300,000. If I can save you a quarter, half, even 0.75% in rate, you're talking a couple $100 a month at least. Think about, we can save you $200, $300, $400, $500 a month. Maybe even look to consolidate some bills and even do it much quicker than that. The loans that we have do not have a prepayment penalty. That just popped in my head because one of the guys I took an application on earlier asked me that, and I'm like, no, you know what? And I encourage you, the months you can send in an extra $50, $75, $100, please do so. If you can cut off 2-3 years of your mortgage, God bless you. Think of a $1,500 house payment. If you can cut off 2 years, that's 24 payments of $1,500. A lot of money. Okay, so what I'm watching right now is, I'm trying to catch bottoms for you. Will we always catch the lowest rate ever in history, period? No. And you can have the best stock advisor in the world, and he's not going to catch the low, not buying a stock at the lowest price it's ever been pushed out at and sell at the highest price, tick. If they did, they're going to jail because they had insider trading. This is the data that I have to work with. So I'm going to leave it at that because we're almost going on 20 minutes and I don't, it's late and I don't want to put you guys to sleep and I got to get some sleep tonight. So I'll alert everybody tomorrow morning on how the market opens because the Fed is continuing to push money into this. I also tried to find out from what lenders are helping give relief. So if you're out of work or you just need to know what lenders are offering what kind of relief, that is a work in progress that I'm trying to do on your behalf. So I'll try to post maybe tomorrow midday or so what my findings are there. Because I'm basically the channel is I'm trying to educate you guys. Hopefully you use me when and if you need a mortgage. But if not, I kind of like doing what I do just to spread information, the facts. So God bless you. My name is Dan Frio. I do the mortgage update every night. If you're in the Chicagoland area, please tune in Monday through Friday on WYLL Radio. It's a Christian radio station. I've been on there for 13 years now, I think. And I have the mortgage update every night. You can also hear me on WIND Radio. It's one of the biggest talk radio stations in Chicago. You can hear me on Saturday mornings from 7 to 8. And I try to post this every night to give you the facts, the truth, and what's going on in the markets. So if I can be of any help, let me know. Call me at 844-775-LOAN or shoot me an email. I shortened it a little bit to make it easier on everybody. My email is D as in Dan, Frio, which is FRIO, at preferredrate.com. Don't yet go to my website because it is down. We are off the first week of April. It is going to be up and it's going to blow your socks off. So God bless. Good night. Stay safe. Stay healthy. Take care. See you tomorrow.